All right, we're all systems go. Okay. Again, thanks very much, everybody, for coming along. Welcome to the ANTSSYS ATP, the trading platform, ANTSSYS trading platform. This is an advanced session. What we're hoping to achieve for our session here today is to give you an overview on the system. By now, I will expect that everybody who is in attendance is conversant with the system. You know how to log in, you know how to open up a chart, and you know how to basically manipulate a chart. On that basis, if you do have any questions, if anything is unclear to you, you will also be sent a link at the end of this. We had a session for an orientation session yesterday where we deal with the basics, which is the logging in and the setting up and loading the charts and so on. I'm going to again assume that everybody is at least to a point that they're able to manipulate the screens in front of them. That's the first thing. The other thing is we have to be we have to be careful. We have to be sensible about the way that we give advice. We are looking at live charts. We're actually looking at live charting information. And so I must remind you that the decision to execute and to enter a trade is entirely your own. We work on what we identify as high probability opportunities, where we use very advanced software to identify the best place to get into a trade, but the decision to get into a trade is always going to be ultimately going to be yours, just to be clear. As I explained a moment ago, we're going to be taking questions at the end of every section. Please feel free to ask questions. It's quite amazing how often one person asks a question and it's dwelling in the minds of several people. So again, please feel free to ask questions at any time, and I'll try to pick those up. I've identified 4 sections where I'm going to be dealing with questions. In terms of timing, I'd like to spend. I did a couple of hours preparation this morning, and I realized that I could probably keep you all busy for about 5 hours before I get to the point that I even feel comfortable with going to the next section. So I need to try to condense an extraordinary quantity of information into something meaningful, and my target is half an hour. And then I'm going to give about 15 minutes to specific questions and answers. So that's what we're going to do. That's it. Let's get started. Okay. The system that we use is derived from Daryl Guppy's GMMA, which is an architecture that was first described by Daryl in the early 1980s. So there's no question as to the pedigree and the authenticity, the reliability of the signals, the system that we're using. It is a small modification on some of the technologies, and then the addition of very clever little things called range bars, which have been around for a couple of years. They were again first described I believe, about 11 years ago, refined about 8 years ago, and there are a couple of derivations of those, and I'll deal with those in a second. Just housekeeping. Each of you will be given a short survey to do at the end of this session. I'd ask you, please, it's very important to us that we actually get feedback from the people like yourselves who are using the system. It's only about 10 questions, should take you longer than about a minute. If you could just pop in your questions and tell us what you want. We use that feedback actively to shape the next piece of information that we give. So in other words, it isn't just goes into a bottomless hole. We actually physically strip it down and have a look at what you're saying. So please take the trouble to give me the feedback that I really do want from all of you. Okay. The practical stuff. In terms of setting up the system to work, we're going to be dealing today with one of the trading systems of the 2 that we've identified being the most successful for your basic entry-level trader. The 2 systems that we use are called the 321 and the ETT system, and they're just acronyms. We love acronyms in this game. The 321 essentially uses a modification of the traditional multiple time frame trading system, which all of you probably familiar with, sort of a 1 hour, 15-minute, 5-minute type charts. What we do is we've changed that to what we call the 321 or the 1052, depending on your instrument, trading system. In terms of how you set up, now you'll have to forgive me, I am using a single screen today. For those who've joined me historically, I'm a big fan of real estate. I love screens. I always maintain the more information that's coming at me, the better. I don't become confused by it. I, in fact, become empowered by it. To try to do this on a single screen works perfectly fine. Everything that we do here today is absolutely fundamentally bound in a technical understanding. In other words, it's relevant. So if there's something that you don't understand, I absolutely assure you there'll be a way that we can explain it. So the idea is to make it as binding and as sensible as possible for all of you. I use, you may laugh, I use 6 trading screens, and then I have 2 screens on the side, which is for redundancy in case my system falls over, and then to manage my trades and trade execution. So I work with 8 screens. I have been perfectly capable of trading on a single instrument using a single screen on a laptop quite successfully. As I said, personally, I find a little bit of extra space is always going to be helpful. What you would want to do is, in terms of practical setup, start first of all by populating your screens. The way that you do this is to just move that out the way. You're going to have to open up 3 sessions in your browser. Now, again, I would typically dedicate a screen to each of these. Again, not essential. And again, we've scaled these down for purposes of the demonstration here today. And what you want to do is you want to open 3 instances of your browser window. Very, very simple. Just I use Chrome because I find it's nice and fast and nice and stable. And you just open up, you literally just right mouse button and open up a new window of each of those. You'll have to log into your account each time you want to open up a window. Again, it's a single instance of having to do that. Bearing in mind, one caveat, for security, for safety, the trading platform itself, in terms of your execution platform, the one that you actually physically make your trades from, which is in this instance my main window, this larger window down here. This window here, this is the only instance that you can log into on your live account. In other words, the other instances that you're going to be looking at will be demo windows. Now again, just log into your live account and then as many instances as you want of additional windows, and you can have many of those. So you can have as many as you've got space for. You'll need to log into your demo account. The way that you physically set that up, very straightforward. Again, I'm sorry for those who've done this already. Simply open up your chart, choose your instrument by typing your instrument into the window up on top, and then you will select your range bar settings. Now, I'm going to, in the second section, going to be dealing a bit more in detail about range bars and the range bar size and why it's so critical. Right, so once your screens are set up in this format, the choice, of course, is always, as a trader, the question is, what am I going to do with my time? I want to make sure that I'm getting maximum bang for my buck. So how do we do that? We trade ourselves. We physically do this every single day of our lives. So what do we do every day to make sure that I'm maximizing my opportunity? You know, all of us might have a fondness for cricket. And I see there are a number of Australians here today, so I won't talk about the rugby. But you might want to be doing some other things with your time. And I think a number of us choose the trading arena because of the opportunity that it gives us in terms of lifestyle. Now, the natural annex of that is going to be that you want to make sure that the charts that you choose are going to be giving you maximum bang, or giving you the most value, the most opportunity in any given time that we're going to be trading. So the way that we do that, practically speaking, the actual physical setup is we every single day on our website, we have for those of you who don't know, just go to ANTSSYS.com, and you, under the support tab, you'll see a commitment, a link to average daily ranges. Now, why are average daily ranges important? Okay, just to explain again the science behind it. If my personal target is to generate 30 pips of activity in any given trading session, why would I start with a currency pair like US yen that only has generated 102 pips average in the last 5 days? We tend to find in Forex that anything beyond about a 5-day look-back period starts to become irrelevant. It tends to be too long. But just for purposes of so that you've got something to benchmark it against, you can see whether there's an improvement or a decline in the daily range. We've got the 10-day daily range as well. This can be clicked to sort from high to low as well. So looking at your currency pairs here, always the Eastern time zone currency pairs always are the most active by volume, and you can see not volume in terms of daily range. You can see the Australian dollar and the New Zealand dollar always feature very high. Now again, in a personal sense, as a trader, you want to make sure that your brokerage is giving you good spreads. You want to keep your spreads as tight as possible. That's the cost of doing your transaction. If you start with a spread of 10 before you even get going, you've got a lot more work to do if you're only after 30 pips. Where if you've got a spread of 0.6, it takes no time at all before you're getting into a profitable state. So again, it's a balance between looking at your average daily ranges and then the spread, the competitive spreads, and be competitive. Push your brokers to get competitive spreads. You will be surprised what you can get if you ask. Right, so on that basis, and again, for today's illustration, I've chosen to look at the currency pair of the pound Australian, the British pound, as your anchor currency, and your float currency is going to then be the Australian dollar. What's quite nice here is we've had a 10-day ADR of 245, so it's been pretty busy. It's slowed down a little bit in the last 5 days. We have ADR of 199. So the argument being, if I'm looking for 20 or 30 pips of activity, of trading opportunity in this currency pair, this is going to be a pretty good place to start. So that's the reason that for today, for two reasons. Number one, because that's the region that I'm talking to most of you in terms of an audience from. And then also it's a good one to trade. It's a good example of what's kind of happening at the moment. All right, so that would be in terms of selection of your 3-to-1 setup. The way that this is set up at the moment, the reason that we call it 3-2-1 is because we use 3 different range bar sizes. Like you'd use a 1 hour, 30-minute, and say 5-minute time-based chart. Here we use, in this instance, and again, I don't want to be too prescriptive because I think it's very important that everybody understands that the system can be used. There's an incredibly broad spectrum of how we can apply the system. You're welcome to follow what we do verbatim by the letter, but at the end of the day, with a little bit of tweaking, you can actually make it work very, very well for your own personal requirements, like indexes, CFDs, futures, that sort of thing. In this instance, what I've done is I've built a chart based on a 10 pip range bar here. So every single one of these lines that you see, whether it's a green one or a red one, every single one of these prints that you see is a 10 pips of movement. This is a 5 pip range bar in the top right corner. This one here is 5. So every single every one of these bars that you see is 5 pips of data. And then my trade page, which is the one that I physically execute on, this one here is every single bar is a 3 pip range bar. Again, I have historically on the lower ADRs, I've traded at a 10, 5, and a 2. I think at the moment, looking at GA, in terms of shape and form, a 3 pip range bar is probably wide enough to be able to get the best opportunity. That means that every single one of these bars is a 3 pip range bar. So 10, 5, and 3. We affectionately call it a 3-2-1 because there are 3 screens. There's a big one, a middle one, and a little one. And these things, as I say, they change from time to time. Then the other thing to bear in mind, and you'd be surprised how often people don't think about these things. And I'm just going to go back here for a second, is that there is a currency calendar of stuff that's going on at any given day. It's very important that we as traders, whilst I personally don't have a great affection for the fundamentals, meaning I don't really care who's taking over who and who's shouting at who and who's unhappy with who in terms of the geopolitical climate. But it's very important to understand what big events are likely to be driving sentiment in the marketplace. Now, sentiment is always an overriding factor to determine whether a currency is strong and whether a currency is weak. Now, my purpose here today is not to talk about the fundamental drivers. We certainly do use them. We discuss them every single day. As a team, we certainly talk about them. But at the end of the day, we've reduced that to a simplified message around a technical system. But that doesn't mean that we eliminate the fundamentals, the potential drivers in the marketplace. We'd be naive. It would be stupid of us to ignore the fact that there are always going to be big scheduled events in the marketplace. And the one that I'm going to use as the most obvious example, the kindergarten example, is non-farm. Non-farm is the announcement on the American calendar. It's the first Friday of every single month. They make an announcement on the new jobs data. It, for whatever reason, and again, not getting into it now, it is the biggest indicator of the health of the American economy. And it's the one thing that everybody gets bananas about. Now, if you're trading through NFP, in my opinion, personally, you're nuts. You're gambling. That's a rodeo. So what we try to do is we look out for, based on our currency selection. In this instance, we've got the Australian dollar as our floating currency against the British pound. I would now be looking out for, I personally use Forex Factory. I'm fond of it. I think it's a hedonistic little site where there's a great deal of information exchanging hands, and you would choose. You'd be looking out for pairs which are nominated in your anchor and floating currency. In this instance, it's pound and Australian. You see, we've had a fair bit of, there was a big pound announcement at 9:13. You'll see that. You'll physically, I'll show that to you in a second on the marketplace. Now, again, if you weren't aware of it, that there was the manufacturing production month-on-month figures coming out, and then there was a drop. It dropped off. The anticipated result was 0.2. The historical one was 0.2, and we've had a worse than expected. That would have the effect of weakening the currency in terms of sentiment, in terms of perception, and as a result, you would see a weakening in the pair, or a strengthening of the floating currency, the Australian dollar in this instance. Again, it surprises me how often people ignore the absolute basics. Now, this is the absolute 101s. This is the baby steps, the beginner, the 1, 2, 3s, if you like, of how to trade. I would always emphasize, get back to basics, trade the simplest, most sensible system possible, and that's what we've tried to build here. So with that in mind, we've chosen the Australian dollar versus the British pound, and you can see there's been a fair bit of old activity around the pound and the Australian dollar today already, and you can see we've got another pound announcement. It's an orange caution folder, so not a great deal of movement we're anticipating around it, but always important to bear in mind. So that's the thing. Right, I'm just going to pop back to my screens quickly so that everybody can see. Right, that sort of introduces the first section of setting up the charts. I'm just going to quickly have a look if anybody's got any questions. Anybody any basic questions that I can answer at this point? You'd be welcome to pop them in. As I said, answer your questions. I'm going to come back to them every couple of minutes, as I'm doing now. I don't see any questions or any hands up, so I will continue. Right. If a bit of a chuckle. If there's one thing that I want you all to take away from today, is I want you to understand the difference between a pip and its relationship with a range bar. I'm going to pop this up for a second, and I want everybody to use their X-ray, their photographic vision, and remember this. There are two types of currency in Forex that we look at, what I affectionately term the US pairs and then the yen pairs. If you look at the right-hand margin, if you look here, we're looking at, and you look at the right-hand margin, you can see we travel down to the 4th decimal place. Okay, when we're looking at a US-based pair, in other words, a non-yen-based pair. So I need to make sure that I'm asking the charts to give me the correct information based on the range bar data, the tick-based data that's coming at me. So operating down to 4 decimal points, 1, 2, 3, 4, I want to make sure that the last number is the amount of pips I'm looking for. So this is this is essential, guys. This is absolutely important that you remember when you're trying to shape the size of your range-based chart in terms of the setting up the chart itself. The people get incredibly confused about this. If you remember nothing else, remember that on a US-based pair, operate down to 4 decimal points, and a yen-based pair, you operate down to 2. Make sure, make a snapshot, use your vision to remember this, and you'll see how it's expressed in the chart. You can see under my range bars, you can see this is down to 0.001, which is expressed as a 10 pip range bar. Compare that to here. There's an extra decimal in there. You can see 0.0003, and that means that I'm looking at a 3 pip range bar here. Very important. If you auto select, it'll select you back to around a 2 pip range bar as a standard. We've set that up as a standard to avoid a bit of confusion. Very, very important that you have that information correct. Otherwise, your charts are going to just confuse you. So that's the thing. You want to make sure that your pip size on the chart looks right. In terms of the basics of trading our system, I'm just going to expand this for a second and explain it to you. By the way, this is a beautifully we've built this to be very fluid, beautifully interactive. If you want to compress something, you either scroll your mouse button, which will allow you to zoom in and out, or you can just grab the right hand or the bottom margins and compress and expand from there. So, or of course, you can use these little hot buttons here. If there's too much information on the y-axis, you can just compress it down here as well. As I said, it does this all automatically, very smooth, very much like driving an iPad, which is lovely. All right, so what we can see here, the first thing that we look out for in our trading system, we're using the rules of the Guppy multiple moving average. And the GMMA says to me, I have two distinct groups. I have a fast group and I have a slow group. The relationship between the fast group and the slow group is always going to determine the longer term, the direction of the trend. Trend is your friend. Trade with a trend. Trend is your friend. Trade with a trend. How do we identify trend? We make sure that we're on the correct side of the trade, and the way that we've identified that in our system is using a 60 EMA and a 300 EMA, which are these two lines here. You've got the light blue line here, very, very clear, which is the 60 EMA, the fast group. sort of the anchor point in the fast group. And then we've got the 300 EMA, which is this orange line here, which is the anchor point in the slow group. The relationship between the 60 and the 300 EMA is always going to be absolutely critical. The reason that we say that is because when you see a color change in the moving average, in other words, you'll notice that there's color change based on the position of the 30 and the 60 and the 300 EMA. At that point, we're looking for trades. Trade price never moves in a straight line. Never move. I wish it did. Never moves in a straight line. Price will go up. It'll break through the 300 EMA. It'll run down, and look at this. Absolute textbook. Price comes down through the 300 EMA, retraces, you've got a color change, we're on the correct side now of the 60 EMA, touches the 60 EMA, and you get signals. Now, we typically, when you're brand new to the system, we look out for the first ant that fires. The ant are these little arrows, these little triangles, green and red, green being sells, shorts. Try that again, reds being sells and shorts, greens being buys, longs. We're looking out for the red and the green ants. We try to identify a safe zone based on 20 pips wide. This channel, this moving average channel that we have identified here, which is again one of the ANTSSYS indicators built natively into the system. The MA channel that we, and by the way, you can configure this all from the configuration tab if you want to change it. At the moment, you can see it set again. Work with me, 0.001 down to the fourth decimal means that a 10 pip channel from either side, so 10 up and 10 down. What this means is that the closer I can get to entering a trade in or around this zone here means that if the trade is successful, I'm right at the beginning of the change in direction, the change in trend. And if it fails, I don't have an extraordinary amount of time to wait or waste burning up my good trading before I recognize that the signal was a bad one. So that's why we try to get people to operate within, all of you, we try to operate as close to the 300 EMA as we can. You can see a little bit far away, this section of ants here, but certainly this group here would have been really, really good. Now, as I said, the reason that we do that is purely in terms of trade management and risk management. As a layperson, if this is the first time that you're seeing our charts, the thing that you want to be looking out for, again, we're looking at a 3-pip range bar, you want to be looking for the color changes. You'll always see, every single time you will see there'll be a change in direction and price will pull back and it'll move. Change in direction, price pulls back and moves. Now, the reason that we use range bars, the reason that we've changed this to use range bars is because it gives us a fractal repetition. It gives us a uniform picture based on the relationship between the previous price print, the price expressed by the chart, and then the very next one. Mathematically, it becomes linear. It becomes very much easier to compute and express. And that's the reason that we do that. Now, as simple as it sounds, as potentially ridiculous and lightweight as it sounds, by trading the GMMA on something like this, using a 3-pip range bar, simply trading the color change over, in and up, over, in and down, over, in and up, over, in and down. I don't know if you guys are noticing a pattern, but we're tending already to be on the right side of the trade. Some of these trades are pretty impressive. Shortcut key, by the way, Alt-M, make a note of the shortcut key. You'll see that there's a little ruler here giving us the size of the trade, and you'll see from where you click and then down, if you just notice, if you keep an eye on the numbers scrolling here, you can see this movement down was a total of 165 pips, which is an extraordinary value. So something like that, obviously quite exciting. It's nice to look out for. Remember Alt-M if you guys want to do that as a calculation tool. So that's what practically speaking, that's what we're looking out for as traders. We're looking out for a change in direction, a color change, and a pullback. Now, we're looking at the pound Australian dollar today. We're looking at it, this is right now live. This is the live chart. I'm looking at exactly the same charts as you're going to be looking at. Why is it that this section here was a dud trade? Again, if we're if you're applying the Niels Law 101, which is I get into a trade every time there's a color change in an ant fires, why did this one fail? We did okay with this one. We would have lost on this one as well. Why? Why are we seeing the getting signals which are incorrect? And the reason for that is because we apply a longer term vision based on supporting information from longer term charts. And the way that we do that is to apply a longer term time frame. Now you'll just see across these charts That was at about 4 o'clock yesterday afternoon. We had a change into the downside. You can see a little blip this morning leading up to the news. That was the 9:30 news. A little bit of a blip around that. Again, that's why we watch out for the news. And you can see if we'd been taking all of the short trades since the change yesterday afternoon to the downside, you would have seen some extraordinary trades. Absolutely extraordinary trades. So from that point there, we were looking at 108 pips. Even this one here, this tiny little one this morning that happened at just after 9, about 10 past 9, that little one there from that ant, again, outside of our moving average channel, but again, we're quite bearish because the market itself is very, very short. Everything is looking very, very short. Even that little movement there in line was 27.5 pips. Now, again, I know plenty of guys who would be real excited about banking 25 pips. What you'll see here is quite exciting. It's in the process of happening at the moment. We're in a short state here. We've got a confirmation in our medium time frame that the markets are still in a downward trend. We have a little bit of a correction. Here we've had a little bit of fluttering and we've had an ant that's fired short. So this would suggest to us at this point that we're still looking for short opportunities to continue in this market for the rest of the day. But, and I say this but, why was I obsessing about average daily ranges a moment ago? Why was I getting a little bit silly about identifying average daily ranges? Well, let me show you. If we add the ADR levels, this physically plots the daily ranges that are pulled off our website every single day on your charts. It takes that data and it plots them on your chart itself. Absolutely fascinating. Lo and behold, folks, look how it's run out of steam when it's reached 100% of its ADR. Now, again, people think that I'm some kind of witch doctor. I'm casting, like throwing bones, but I assure you I'm not. This is purely because from the start of this morning's open, it ran all the way down. This pony is tired. This horse has run. Did a little bit of a correction back up to the 50% long, came back down, and it's tested this low section here of 100% short ADR. In other words, it's done. The horse has run the race. It's done. It's finished. It's tired. The statistical chances that a price goes from the open to the 75% short is 82%. Now, that's a statistically significant piece of information. It tells us that at any given day, if I get on the right side of the trade before the 75% level, there's an 82% chance it's going to get to the 75% level. That's extraordinary. That's based on over 4,000 days of backwards research that we've done. We know that to be almost true, 82% true. If this currency pair has already at this point throwing me out short signals at this level here, I'm 5% off the 100% short range. Why on earth would I want to take a short position at this point? I need my head read. I know that this currency has run. It's exhausted. It's done for the day. I would be looking for another one. Chances are, at this point here, that it gives us a short at 75%. Again, you don't have to be gut feel. This is practical, pragmatic 101 common sense. The chances that this price is going to continue down, give me a 20-30 pip movement and continue down for the rest of the day is slim to none. I'm happy to come back tomorrow morning and eat my words, but statistically, this chart is finished. The chances we're going to get a turnover, pullback, and continuation up is probably better, but for the moment, this would be a chart that, for me personally, would have run the race for the day. So that's how we identify the charts. This is how we identify the setups. This is how we make sure that we get onto the correct side of the trade. In other words, we're taking the shorts, we're ignoring the longs, and we're continuing with the shorts. And at this point, I would be really speculative about expecting anything more than 10 or 15 pips out of this movement. It will probably give it to us, but it's not going to be a 130 pip move unless the Australians declare war on someone. At this point, it's unlikely to see very much more activity out of this chart. And that's how we read the charts. It's beautifully simple. It's easy. It's comprehensible, easy to understand, and that's how we build the picture that we see. So that's how we look. That's probably the end of my second section. That's how we look at identifying what a chart is doing, what we're likely to see, and how much of a trading opportunity we've seen out of it. Right. For a second, I'm just going to go back and have a look to see if any questions have arrived. In the meantime, right. Scott has asked, during the London Forex session, which times are better suited for the ANTSSYS trading system and why? Great question. Scott, let's just look at this chart here. Let's answer that with, again, nothing is more annoying than for me going online and seeing somebody preaching about their system and not showing me it actually working on a chart now live. So let's always, if I don't show you live, then call me out. I challenge you all. In this instance here, there's the midnight open. This would have been around, early morning for you guys. This is I'm on London, looking at London time here at the moment. look at the amount of activity that we've had. It stands to reason that the big movers in terms of currency will be around the nominated currency that they're dealing with. Statistically, the yen moves most during the yen session. The Australian dollar moves most during the Australian session. I know that's probably a bit of a wide, a sweeping statement, but you'll tend to find, for example, I know at the moment, right now, just before I came into the session, the chef and the euro are wide awake. They are doing beautiful things at the moment. They're absolutely cooking at the moment. So if you happen to be sitting at your computer, Scott, and you're looking for something that you want to choose, bring up each of your pairs, pop them up very quickly, overlay it with an ADR. So pop an ADR, an average daily range indicator on top of it. And if you see that the pair has done 100% up or 100% down, just find the next one. Find the next one. Move on to the next one. That's generally the best way to do it. I could be a little more technical, but practically speaking, looking at a single screen, that would be the way I would start. Douglas has asked a question: do the 3-pip charts have to be the same color as the 10? Yes. Oh, sorry. Goodness me. I mean, that's because I get far too excited. It's a great question, Doug. Confluence, agreement, consistency, continuity. If this is red and this is red and this is green, it's not going to work. The trade is going to fall over. If this is green, this is red, and this is green, it's going to fall over. If this is green, this is red, bang, you're in. That's the reason that we use the high time frame confirmations. The reason that we use them is because it gives us an extraordinary, on a 10-pip range bar chart. This is a really slow chart. This is you're only going to generate a screen in a 24-hour period, where this is a lot faster. You want to make sure that the information that you're seeing is supported by a longer-term vision. We're not scalping here. We're not looking for 3 pips at a time, which you could do safely with a single chart. Well, I want 20, 30, 40 pips. I want to sit here quietly. I want to sit with a cup of tea. I want to be able to go and make another cup of tea if I need to, without being in a flat panic. And so the idea is that we look for longer time frame confirmations to make sure that we're on the right side of a trade. That's a great question. Always make sure that there's a confluence, an agreement between your 3 time frames that you're applying, whether it's a 10-pip, 5-pip, 3-pip, whether it's a 20, 10, 5, whether it's a whatever it is that the particular instrument that you're looking at. That's a great question. During the last ANTSSYS webinar, you mentioned that the pound chef pair is one of my favorites. What characteristics? Okay, volatility. We haven't seen volatility in the forex markets like this since the pre-2008 global financial crisis. We haven't seen the kind of movements that we have. We haven't seen range necessarily. I remember in November 3 years ago, we were seeing 400, 500 pips a day movements on the currency pairs. It was extraordinary. It was a great time to trade, but the volatility just wasn't there. There wasn't the big moves, the big swings. At the moment, particularly with the chef, again, I'm going to put on my fundamental cap for a moment. We all know that the Asian markets are in a bit of a state with an overinflation, and the popular opinion is that the Chinese markets, the Asian markets, are overvalued quite significantly. They reckon they're still about 25% to come off. Now, they are a massive commodity-based marketplace. We all know that to be true. Commodities, that's the stuff that burns. So it's the oil, it's the wood, it's the food. The natural sense is that people will return their money to a safe haven when the commodity market's slow. So you'll tend to see gold becoming more volatile. You'll see a slowing in the oil price. Again, it broke $40 a barrel into $38 a barrel rather extraordinarily last week. And I'm hearing people talk about hitting 20, which blows my mind. So at the moment, the chef, since the chef announcement on the 15th of January, which blew everyone's mind, 1,400 pips in about an 8-second move, extraordinary, blew out a whole bunch of accounts. The chef has always been the Swiss, whether you like it or not, the Swiss franc has always been seen as an anchor currency, a safe currency. So we're seeing great volume at the moment at the pound chef. Big movements, solid movements, consistent movements. Doesn't tend to blip, doesn't tend to spike, doesn't tend to be catch you on the wrong side. So personally, at the moment, I get a great deal of enjoyment out of trading the pound chef. Just watch your broker. By the way, watch your broker on spreads. They tend to be a bit jumpy around the chef at the moment with the chef crisis that we had in January. So just keep an eye on that. There's a couple of great questions there, guys. Right. I just want to speak a little bit more about the practical sides of the trade. When you're using this MA channel, let me just hide this away again, so I've got more space on my screen. When you're looking at these charts, the question is always, well, how do I trade in and trade out? Now, what we've done is we've built a trader's ATR. which we overlay on top of this little purple line. I don't know how well that's going to come out for you guys, but I can try. And you'll see, I mean, again, the colors are wrong, but if you'd been on this side of the trade, it would have taken you out here. On your long, it would have taken you out here. So just bear in mind, then just change the length. Guys, simply change the length of the study until it actually fits, until it just looks right. You'd be surprised how, I mean, I wish it were more complicated than that, but you'd be surprised how often that just makes sense. So even in this instance here, from this short position here, on the first movement, we were looking at the ATR giving us about 16 pips. Continue to the second one would have been about 43, and so on. So I personally am not a great fan of the ATR. Personally, I tend to find that we can get longer, bigger movements. But for someone starting out, if this is the first time you're looking at trading, don't be afraid to use the tools that are built into the toolbox. There's a very good reason that we built them and put them in there. So trade management around the ATR is very, very important. As I said, I was quite excited to see. Again, the beauty of the system is it works every single day. There's nothing worse than seeing a system where architecturally it looks beautiful one day and you come back tomorrow and you have to change all the rules. With this one here, I was delighted to see. I wasn't quite sure why we kept on hitting this low and the continuation, despite at the moment a weakness in the pound and a strengthening in the Aussie dollar this morning. Why aren't we seeing continuations? Why is this chart trade at the moment here looking a little bit iffy? And the reason again is your ADRs. I mean, absolutely magnificent to see. It's gone down, tested at 1, 2, 3, 4, and it's broken through a fifth time, comes back and then run away. I mean, boy, this pony is flogged. It needs to be put to pasture. Really good example of why the tools that we have at our disposal make a lot of sense. That's probably about as much as, let me just have a look how long I've been talking for. In terms of you guys, you're 44 minutes, 45. That's probably about as much as I want to do in terms of dealing with the technical side of the trading. I think I've come up with a really good example. We're talking about one that's really relevant, one that makes sense. Let's just see. I've had another question come in. ATR on the medium-term chart. Right, great question. Well, let's have a look at it. There's no better way to answer a question than to look at it ourselves. Let's turn the ATR on. Let's just widen the, whoops. Let's just widen the period. Double that to 42 and make that an 8. Okay, so on this one here, Scott, unbelievable. We should keep you on payroll. In this instance here, from that entry there, color change and down, the ATR took us out at 80.4 pips. Wow, good idea to use an ATR on the medium frame chart. Not something that I've done before. Good example of the kind of thing that you can do. The stuff makes sense, built very intelligently. Great example there, Scott. Thanks for that. Checks in the mail. Let me just see if there's any other questions that have come through. Right, guys. Just very quickly, in terms of additional stuff that's available around as well. We all work. We're a tiny little team here in the UK, but we work really, really hard on trying to make resources available, stuff available, to keep you guys informed and to give you good information and live stuff and stuff. The stuff that we're looking at every single day. Please pay attention to the AR pages, the range pages, and then also come and join us on our forums. Oops. Come on, Neil. Join us on our forums. The forums are a great place where we've got a really active community. We can get 20, 30, 40 people can be on it at a time, and they're quite often talking about stuff that's happening live. It's a great place to share ideas, share experience, share what you're doing, ask questions. We monitor it as best we can. We all trade ourselves, so we all monitor as best we can. But quite often it's very exciting to see the dialogue that's happening between users, the guys actually physically using our platform. So you'd be invited to come along and join the forums. If you haven't been registered you should have automatically been given an invitation if you'd signed up through Oanda. We get there's sometimes a little bit of a latency. I apologize, between your sign up on Oanda and your invitation. It can take as long as a week. We only get our updates. We have no sight of who you are. We only see an account number for security reasons. So we've got to wait for Oanda to give us feedback on who we're physically talking to. And at that point, you'll be sent an invite. If it's urgent in the meantime, send an email to support at, just remember support at ANTSSYS, and that's monitored pretty much any time that any of us is awake here in the UK. And we're always happy to answer your questions. Colin, question. The yen pairs don't show the channel. Okay, I'm going to, the difficulty I have here, I'm just going to caveat this here, because in terms of building a range-based chart, it plots several 10,000 points of data, so it's pretty resource intensive, and I'm in the process of giving you a presentation here as well. If I now change my chart setup, it's quite likely to spool. That's not a limitation on the software or the connection. It's purely because I'm on a single machine at the moment and running multiple screens. What you need to do is, Colin, I'm going to take you back to the very first point that I made. I'm going to bring it up again. If you're looking for a 10 pip MA channel, make sure that your MA channel value is 0.1. It's defaulted to 0.001. So go to your configuration tab under your MA channel zone. Make sure that this value here, if you're looking at a yen pair, is 0.1 for a 10 pip either side. That's 20 wide. So from the 300 EMA, it's 10 up and 10 down. So please make sure it is physically there. It will physically be on your chart, but it will have been reduced because we typically plot for the most commonly used pairs, which is going to be the US-based pairs. So everything that is not a yen-based yet pair. So Colin, make the change to 0.1 and tell me if you've had a change. You should have. That's not an uncommon question. Oh, he said thanks. I'm assuming it's worked. That's always great. Right. Okay, folks. I think that's it. Like I think I'm quite pleased with the flow of things. I'm quite pleased with the amount of information that I've managed to get out for you guys today. Jeff is asking a question: do the ANT settings change with range bar settings? No. The actual the system itself. Let me just show you. Okay, I'm just going to kill these other ones here. So we're going to just eliminate the 3, 2, 1 for a second, and I'm doing this just purely in terms of speed. When we change from range, and from a range bar to, it's a little bit faster. Jeff is the reason I'm doing this. The reason that we use range bars is because the math that we use to calculate, despite this looking really pretty, I mean, this looks really great. It's generating a lot more signals. The reason that we use range bars is because the maths that we plot looks back for several prints before that. So it can be up to 17 or 18 bars looking back, depending on the range bar setting that you've got. It can be even longer at times, sometimes a bit shorter too. The ANTS does the maths dynamically. So our ANTS are built to work most accurately, most consistently on range bars. That doesn't mean it's extraordinary. It doesn't mean that they don't work because it's maths on anything else. You can see they're working perfectly here. They're on a 1 minute, I mean, I drive myself mad, but on a 1 minute time-based chart here, you can see they're still chucking out the shorts, which is in time with our longer term stuff. So we tend to build the ANTS around range bars. You don't have to change any of the settings in them. We've got a couple of really clever additions. Again, the system itself as it stands works. But as users, people are giving us feedback in what's nice and what's sexy and what's a little bit clunky. And so the great part about this system is you guys may not even notice it, but overnight we'll do an update from our development guys are in Virginia in the US, and they'll do an update. You arrive tomorrow morning and there'll be a new feature built into the software. And you didn't even have to download anything. So we're constantly updating. You may see the changes, you may not, but that's the great thing about the system is that every single day you get in. It's like Christmas every day. Douglas is asking, Daryl signals pound CAD this morning had a 7 to ADR 12 over 74. So one range bar the charts change around 7 times 40. That's a great question. It depends on the time, the GMT that you're working on. Douglas, it's a great question, and I'd have to look at it. I'm not going to take everyone's attention for the moment. It's a great question. I'll pick this one up with you. If you want to just drop me a ticket to support that, I just want to make sure that the calculations are correct. In other words, what you're saying is the same as we're saying. Bear in mind, I'm on a London-based time here, which is we use GMT as our central calculation. Your Daryl's this morning may have been done based on Australian Central Time. So there is always going to be there will definitely always be a small discrepancy. It's not going to be monumental. It shouldn't be 100 pips, but there will be a difference between the two. I think between the two there, you're talking about 34 and 43. So, we're 9 pips off, which is not unusual, but that's usually why there's a discrepancy, to try to explain it to you. But yes, thanks. Please send a ticket to support, and I'll make sure the math is correct. 9 pips on an ADR is not a train smash. It's not big. Bear in mind, we're at the center of the universe here. We don't think so. unless you're talking about rugby. Um, where everything's based on GMT. It just makes it easier for us. We're not very clever beyond that. Okay, guys, I think we're probably, it's 52 minutes that I've been doing this for. Will be another webinar, and what will be the content? Scott, good question. I think more of the same. We've got another trading system called the ETT, which works on an envelope expansion. It works on when a currency is hugely overpriced, when your stochastic is heavily overbought and oversold, and then where it's a bit more of a scalping system, where the price must return to a state of normality. In other words, it's when we catch the ebb after the flow. Tends to not be quite as active. It tends not to be, in other words, you don't get one every day. I think statistically, I rack my brain, I think we see an average of 14 a month, but of those 14, they generally will generate between 80 and 100 pips. So they're worth keeping an eye out for. They're worth having at the back of the storage bank and be looking out for. So we'll probably deal with more details like this. I always find it's very helpful. I'm a trader myself. I always find it's very helpful to be sitting and talking live around a chart. It's nice to be sitting and talking about something that unfolds in front of you. Apart from anything else, it's personable and it's enjoyable, because you can, when you see it happening in front of your own eyes, that always makes the message that much more compelling. So I think we'll be doing more of this. Our idea is to, do a basic webinar every Tuesday and an advanced webinar every Wednesday. Again, I've tried to make this as appealing broadly to everyone sitting here. I've got with a couple of friends of ours who are on the session, and it's always nice to see you. But we're trying to make it relevant for as many people across as possible. Question in terms of ANTSSYS and ATP. The difficulty we face here is that there's so much development happening at the moment. The catch up is a bit slow. We're a really small team. Unfortunately, that sounds a little bit like an excuse, and if it is, I apologize. Although I'm told never to say sorry. It's a bad thing, but I do. It's a small team and we're really, really busy. And then the updates, and then we'll change something anyway, and it's typically look and feel. So I think probably the best way to stay cutting edge on this thing is to come join our webinars and then watch the stuff afterwards. As I said, the links are always going to be available and sent to you shortly after. There's always new development. The great thing about it is, we're a small team here in the UK. We've been doing it this way for about 5 years, quite successfully. And someone will come along and go, hey, have you guys thought of this? And it's like a watershed. It's fantastic. It's this great big epiphany that we all enjoy, and we go, geez, that's amazing. We can build this in. And that's the beauty of our software, is that the ability to add, and that just gets constantly built in. Right, guys, I think at the grand old time of 55 minutes and 41 seconds, I think I've probably given you enough. I'll give you another 30 seconds or so to pop in any additional questions if you've got them. I will try to field those as best I can. Oh, Don says he's lost us. Am I still with you guys? Can you guys hear me okay? Can I just have a quick yes, hear you okay, just to make sure that everybody can still hear me? Yes, okay, cool. More is there enough, Doug? Thanks. Okay, good. Everyone can hear me. Okay, guys, listen, thank you for coming along. It's great fun. If there were a way I could practically have you all join me on my screens every single morning, I would love to have you along. Just to give you an idea of what my landscape looks like, let me just go. This is a screenshot I took this morning. You'll see it in a second. That's what my screens look like from left to right. That's what my desktop looks like. I won't leave that up too long. I don't want to scare anyone. But you're able to process the system is awesome. It gives us so much information that we can act on easily, and we can operate with easily, and that's the thing that's really exciting about the system. It turns what is a messy, aggregated mush into, I guess, a Cinderella story, and that's the bit that we're really excited about all of this. It makes it easy to understand. Don says I'm back again. Hayden can hear me. That's great. Okay, guys. By name, I don't want to thank you all, but I just wanted to say, all of you guys, thanks for coming along and joining me this afternoon. We've done it for an hour. Please, 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 you're about to get, when the session ends, you're going to get pinged a survey. Please take the time. I love doing this for you guys. I really do. I enjoy it. and I'm happy to do it as much as you want me to. I'm happy to scare you with all the details. As I said, I could do this for another 5 hours and not even break my stride. But it's very important that the content that I'm giving you is meaningful. I don't want to be taking your time or mine when I can be using it to enrich your guys' trading experience. So please guide me with your feedback. Try not to be cruel. My fragile ego. But absolutely, give me your feedback on the information that I've given you, and we read it and we discuss it. Colin, you're welcome. Okay, guys, with that in mind, you'll get a survey in a second. There are handouts that I've attached to this webinar that you guys are welcome to download. You'll be all emailed the link of this video, which will follow you shortly. It takes about 20 minutes, half an hour. Bear with me. As always, go to Oanda. They're a great team of guys that are giving you this software at no charge, which is absolutely extraordinary. Just to explain, you need to open a small US dollar-based account, about $200 you need to populate. You need to make 5 trades. That's all they ask of you, is to make 5 trades. You can go micro lots. You can buy single pip stuff. And for that, they will continue to make the software available to you, which is absolutely extraordinary. There are people all over the place who are spending money on getting the system and are paying for it, and purely by using what I consider to be a world-class. This is a bit of a punt for, and by the way, they didn't put me up to this, so my position is entirely sincere. I don't need to. I hope my saying so resonates with you. They're a good broker, and their spreads are good. They're worth having a look at, and we're very, very proud and very, very excited to be teamed with them. Jeff, you're welcome. Guys, on that note, thank you for joining me, and we'll look forward to more of the same. Thanks very much.